if you can really solve, pain points with stablecoins, and find these companies that are really doing interesting activity, you can grow supply, grow transfer volume, and really, form this like really loyal, sticky user base. When you start from zero, you incentivize a little bit, expand the offerings for people, actually solve problems, and then before you know it, you're a $1 billion stablecoin.
Welcome back to Tokenized, Stablecoin Stats edition, the show focused on stablecoins and the institutional adoption of tokenized real-world assets. We are back again this month to dive into the stats behind the stablecoin market. My name is Anthony Yim, co-founder of Artemis, a crypto analytics startup. Joining me today is my colleague and friend, Andrew Van Aken, data scientist at Artemis. So, Andrew, how are you doing this lovely morning?
It's a beautiful morning in New York City. I'm here for the Artemis offsite, the Q2, Q3, whatever year we're in. And I'm enjoying these overpriced coffees based on this windfall of around $27 that I got from you. I woke up one morning to see my Tether on Tron wallet increase by said amount. And I thought, who was sending me this windfall of cash? And it turns out it was you, Anthony Yim, sending from halfway across the globe. How did this come about, and how did you go about doing this?
Yeah, well, I was in Hong Kong visiting my parents last week, and I was just walking around in the downtown area of Hong Kong and saw this OTC desk that is allowing people to transfer on Tether, buy Bitcoin or Ethereum. And I've been hearing so much about these OTCs, I just couldn't help myself but give it a shot. And so I wanted to see what the experience is like. And so, as you see in this photo that I took, it's literally just like a shop front. And so, and so for those who don't, I guess who are not familiar, like these OTC kind of like quote unquote desks are essentially like a way for consumers to interact with crypto without having to sign up for an account on Binance or Coinbase or even have your own wallet, right? And so it's basically like this like service that you can just fork over cold hard cash to this dude behind the desk, and they will sell you Bitcoin or help you transfer stable coins. And the experience was very interesting. So how it works is that I actually show up, I go up to the stall front, and I'm like, hey, I want to send some Tether to my friend, and he basically points me to this QR code that is a WhatsApp link, and I basically type in Andrew's Tron wallet address, and I'd be like, hey, I want to transfer X amount of dollars using Tether to this address, and he will basically, and to this guy on the other side, we go through this whole like process of he confirms the wallet address like 4 times with me. Once verbally, the second time he sends me a reply of my WhatsApp message with the same address, and he makes me read it out back to him. And the third time he prints it out on this little piece of paper, he hands it to me and tells me to like confirm it again, like so 3 times. And then once I've confirmed everything, he then actually sends this transaction. And I was, while I was waiting for the transaction to go through, I was just asking him like, hey, like, what is it like being, an OTC? Like, how long have you guys been around? Like, how many storefronts do you have? So they've been around for a couple of years, 2-3 years. They have 4 different locations in Hong Kong. They have, I actually think I sent more than just $27 because the minimum buy was $400. And so I actually had to go to I didn't have $400 on me at that moment. So I actually had to like leave and go to an ATM to take out more cash so I can actually meet their minimum buy amount. And the fee was $50 Hong Kong, which is about $6.25, I think, US dollars. And then largely after there's sort of the crazy back and forth confirming the wallet address for 3 times, it was very smooth. I mean, it was just like, he did it, and then a couple minutes later, he showed me the blockchain explorer confirmation of the transaction going through, and that was it. And and there's obviously no KYC, and so this is like, if you were to money launder, this is kind of how you would do it, right? And so I'm not saying this, I do not condone money laundering, but it was just very interesting to be like to actually like go through with the process and see how it works.
And the only option they gave you was Tether on Tron. Is that
That's
right?
correct. And I asked him, "Hey, do you support any other blockchains?" And he kind of actually looked at me like I'm crazy. I was like, he was like, "No, it's Tron." On he was kind of annoyed with me for asking that question, even. So yeah, and so I think like there was no other option, and you can see from this screenshot, they also only support Tether as well. A quick disclaimer before we get into things. I need to remind you that the views or opinions of our contributors today are their own and do not necessarily reflect those of the companies they are representing. Nothing we say should be taken as tax, financial, investment, or legal advice. Do your own research. And lastly, before we get into stats, I'm thrilled to remind you that this podcast is made possible by Visa and powered by Artemis.
Well, that clearly got me thinking, how are we going to incorporate this into stablecoin stats? And we have a metric on Artemis, actually, that what we call P2P volume. This is essentially address to address volume. So it's people or entities that are not contracts or smart contracts. So this is trying to estimate what the actual volume of exchange to person to exchange, person to person is. And the data is overwhelmingly convincing that Tron is by far and away the largest blockchain used for P2P transfers. This is looking at monthly volume going back all the way to 2018. And you can see that the red line of Tron is clearly up and to the right. We actually just hit an all-time high of transfer volume, a little less than $600 billion in last month, dipped slightly. But by far and away, Tron is clearly the most utilized chain. And from your experience in Hong Kong, it clearly indicates that people are mostly using Tron.
Yeah. And I actually have another anecdote. I was traveling and I met a tour guide too, who was a farmer in China. He grew up as a farmer, and and so I was just curious and asked him if he uses any crypto. And he does. So he uses actually OKX. He showed me his OKX account and asked him, "Hey, do you use any stable coins?" And he, to my surprise, said yes. And and primarily what he uses stablecoins for is to convert from the Chinese yuan to Tether so he can buy Bitcoin. And he proceeded then to shill me Bitcoin for the next 5 minutes and about how it's digital gold, the scarce supply, there's a halvening, it's going to get more valuable, it's going to hit $1 million, by 2040 or something. And he has to do all this through VPN, and it's not strictly legal in China. And he has a Twitter account, and he follows all these Chinese influencers on Twitter. And he got his wife also buying Bitcoin. So, and it's and this and he's using Tether on Tron to buy Bitcoin. So that's another like sort of, I don't know. I think as a startup founder, we're taught to be very proximate to your customers, and it's not enough to just hear from third party sources. We have to go talk to people on the ground and sort of do direct conversations with them and to understand like how they're thinking. And I think it was just what the guy said, what this farmer said wasn't entirely surprising, but it's just very interesting to see it like in real life. He doesn't know what USDC is. He never heard of it.
Yeah, and I think the one thing that we hear from our customers all the time is, how do you grow stablecoin supply? And this is probably an area that we see as one of the most overlooked areas, because there is so many places with like this boots on the ground strategy where we really see this three ways of growing stablecoin supply. And the first one is clearly this, boots on the ground strategy, P2P transfer volume, low cost chains, et cetera. And we also see this in our most recent study that we did with Castle Island and Dragonfly Ventures, where even large corporations are using Tron to facilitate payments. And so our study looked at B2B, remittance, P2P, and almost 60% of stablecoin volume is driven on Tron, with another about 30% on Ethereum. And so we say a lot, every bank, every company needs a stablecoin strategy. And really this getting stable coins in the hands of people. How do you do that? You build these payment networks, build these OTC desks, build out liquidity. And it's really interesting to see that, not only we can see it on on-chain data, but we can also see it on off-chain data that, yeah, Tron and Ethereum are the top two chains by stablecoin supply, also happen to be the top two chains in stablecoin transfer volume. We also see this very interesting trend of regional differences of stablecoins. So what we're looking at here is essentially what time of day in Eastern Standard Time do blockchains see the most stablecoin activity. And so I believe you sent your transaction around 2:30, and I fortunately was sleeping then, and so did not see it. But the Tron blockchain, what's very interesting is that it peaks in usage around 4 in the morning Eastern Standard Time, and then declines by almost 80% by 4 p.m. So clearly, this very distinct regional use case of Tron is going on right now. But the Celo blockchain, interesting enough, that actually spikes around 9 a.m. Eastern Time, or which would be, afternoon time in the UK and Africa and European time zones, which is really, one of the areas that Celo has focused on very prolifically, is driving, stablecoin adoption in these regional places. And then finally, Solana, actually, their stablecoin transfer volume spikes at 4 o'clock. So you really need this, multinational global team that's, trying to address all these different places and regional preferences to drive this stablecoin volume.
It's funny because I actually,
Does this make sense?
yeah, I mean, while you were talking, I looked up quickly what the hours of this OTC desk are. It's 11 a.m. to 8 p.m. sort of Asia time, so Hong Kong time. And so, I mean, that tracks this chart. Literally, they're not open after 8 p.m. and they're not open before 11 a.m. And I think I see the spike really getting really high. I mean, obviously, this is just N of 1. We can't extrapolate that much, but it seems to be tracking.
Yeah, exactly. So when you really think about, how do we drive stablecoin supply, it's, yeah, you have to be boots on the ground in almost every country, really, every region of the world. And then one thing that we've started to think about is supply of stablecoins and transfer volume almost are becoming inversely correlated for different non-USD stablecoins, especially. So what we wanted to do here was look at what outside of, we hear a lot of like stablecoins being used for saving and being on exchanges and trading, et cetera. But, are people actually using stablecoins for like these payments or remittance or B2B use cases? And you can clearly see this trend increasing with non-USD stablecoins. So Turkish lira, euro, Indonesian rupee, all stablecoins that are increasing in transfer volume. But the supply of these stablecoins is actually almost below, $10 million. And non-USD stablecoins represent less than 1% of the actual market. So curious, Anthony, your take, given your experience at PayPal, how do companies make money in this space, or how do they monetize without this huge stablecoin supplies?
Yeah, it's a great question. I mean, I think ultimately, for example, you just look at something like CPN, right? It's a takeaway model, and so what matters for payments is it's volume, it's velocity, really, right? It's like how efficient can you make your every dollar, and so like the more your dollar changes, the more every dollar changes hands, more that is better for business because you're doing a percent, fee on the volume as your business model. And so so it's funny because I think in this like sort of high interest rate environment, everyone's obsessed with supply and increasing stablecoin supply. But I think if things continue to go the way they are in the United States, we're probably going to see rate cuts in 2026. And I think reality will catch up to a lot of the stablecoin players, that you can't just rely on interest income as a revenue stream, and that the the reality for payments is that you make money on a take rate basis, and so therefore your number one metric that you need to track is volume and how far every dollar can go in terms of payment volume.
Yeah, exactly. And what we're seeing actually on chain right now is what we call the velocity of blockchains is increasing. So here, what we're looking at is a chart by major stablecoins, by major blockchains that facilitate stablecoin volume of what we call velocity, which is essentially the supply of stablecoins or all the stablecoins outstanding divided by the transfer volume. And these chains like Polygon, Solana, Tron, they've all been very steadily increasing their velocity, if you will, indicating that these blockchains are starting to behave more like payment networks in a sense, where money is moving a lot more and it's moving faster. Um, and so while stablecoin supply on some of these chains might be even decreasing or flattening off, the utilization rate or the productivity of blockchains is actually getting a lot better. And you see that in a lot of apps, actually. So um, here we're looking at a chart of Stellar transaction volume, actually. And so Stellar transaction volume for stablecoins was pretty flat from November 21st through the 23rd. But then a company called Felix Pago, which primarily does remittances, uh, started to take off. They launched this, they raised the Series A about a year and a half ago, and then they launched a Series B. And Stellar transaction volume went from about $200 million of stablecoin transfer volume to now it's about $1.5 billion. So though, is despite the fact that Stellar stablecoin supply is actually pretty flat. While it goes up and down, it's only at about $170 million right now. So it's interesting to see how a lot more apps are coming online for stablecoin related payments. The supply, however, is not increasing, but the transfer volumes and velocity is really spiking. And so, yeah, really thinking about like, how do stablecoins, how do blockchains really change their strategy of monetization with this new imperative?
Very cool. Yeah, I'm a big fan of the Stellar team. Actually, I got a chance to meet them um, a couple of years ago, and also most recently in Consensus Toronto. And they're really missionary folks who care a ton about um, just like making payments work for people who don't have just like who live in places that have mature financial infrastructure, and that they've always been very focused on this from day one. And I'm glad that they're getting a whole bunch of traction in 2025, because I think they really deserve it for being so focused on this like singular mission.
So changing gears a little bit. So how do you grow stablecoin supply? The number two way that we see is clearly trading. And so crypto, the original use case of crypto, it was clearly trading crypto. And you can see volumes of Binance, OKX absolutely explode. And a very interesting trend that we're seeing is that the supply of Solana stablecoins has really rocketed starting in January 2025 when when decentralized exchange volumes on Solana really exploded. And so traders needed another pair to trade against, Solana, meme coin, whatever, what have you. And so the supply of stablecoins on Solana almost like doubled overnight, from 5 billion to 10 billion, and now it's settled around 11 billion. But in the shadows, something that's creeping up is a perpetual exchange called Hyperliquid, which allows trade users to trade at up to 100 times leverage. And their stablecoin supply has went from a few $100 million back in October 2024 to now it's over $3 billion, and might actually be starting to cannibalize share from Solana as people look for different venues to trade at. But the more interesting thing is this almost holy grail of settlement that is potentially coming online, which is tokenized stocks. So recently, about 2 weeks ago, a company called Backlock launched tokenized stocks, which you can buy, popular U.S. stocks, Tesla, Apple, and volumes are, spiked to about $7 million, fell off a little bit with the July 4th holiday. But the key thing to note here is these stocks are actually settled against USDC. And so you think about how many, billions and trillions of dollars are traded on, New York Stock Exchange, NASDAQ, et cetera. Our thesis is that there's this huge audience of people that, can't really get access to US stocks that are, trying these different ways that could potentially be unlocked with USDC. And yeah, really curious your thoughts here, Anthony, on, how do you see this market developing over the next few years?
My first impression is that tokenized stock is something that emerging markets and people who don't have easy access to an American brokerage account would really want. And typically, I think we've been hearing about people, demanding for US dollars in emerging markets and places that have unstable currencies. They transact in Tether. This is the first time that like anything a product that's suitable for these emerging market audience says that's denominated in USDC. So I think it's like a really interesting um, and I think exciting time for Circle. Like I think this would be an interesting go to market. I think to try to capture an audience that traditionally has been more used to Tether. Um, and I guess to go back to sort of my trip in Hong Kong. So Hong Kong is a very special place because it's a special administrative region of China. It follows the common law. It doesn't follow Chinese law, and so even though technically it's in China, they have access. The people in Hong Kong have access to actually buying U.S. equities, and there's an insane demand for it. So there's an app called Futu, Futu. It's called Mumu on, and I think in US and Canada, and I think they're in UK as well. But it's basically the Robin Hood of Asia, and it's like completely taken over Hong Kong. There are storefronts actually of people in downtown area of Hong Kong where you can go and get like technical support for using this like Robinhood of Asia. And their main selling point, if you look at their app store sort of page, is that you can buy U.S. equities. Um, and and so because Hong Kong is this special administrative region that follows British common law, it's an exception in that I think it's like fairly easy to have access to U.S. equities and but I think that's not true for a lot of places. For example, China banned Futu. You literally cannot use Futu to buy U.S. equities in China. And so I think as an American, I'm a bit biased. I think American tech companies are still some of the biggest drivers of innovation and capture and generate a ton of value. And these are blue chip assets that will continue to grow and appreciate for many decades to come. I think there's a ton of pent up demand for U.S. equities across the entire world, and I think Hong Kong is kind of like a preview of that. And because regulatory wise, Hong Kong is again, it's like very Western, and so I think tokenized equity is not as relevant for Hong Kong, but I think it's a proxy to the demand that you see for U.S. equities outside of the United States. I mean, look, it's like Robinhood literally had the biggest, had one of the most like paid attention events in ECC, and they were launching Robinhood in Europe. The Europeans want to buy U.S. equities, but just like think of like all these other countries that that Futu is not supporting, like India, Indonesia. These are $1 billion. These are countries with 1 billion people in population, and they don't have access to this stuff, right? And so, I think that's where it's like really fascinating.
Yeah, it's a great wedge for Circle too, especially because if you have to make a payment, our previous studies have shown 85% Tether dominance in payments. You go to Hong Kong, you can only use Tether on Tron for a payment for an OTC desk. But now, if you can only buy tokenized stocks, and the deepest liquidity comes in USDC, it'll be interesting to see this battle play out of, how do people manage their, Tether versus USDC or, how does Tether start, incentivizing liquidity pools for these things? So I think it's a very interesting wedge for USDC to sort of open this market.
Yeah, I mean, the other piece is also, I think tokenized stocks in theory allow for more fractionalization of US equities. So it's like I can buy a portion of NVIDIA. And so it lowers the barrier of entry for, you can put small sizes into high quality assets as a way to just have like access to, again, high quality investment products. And I think that's also really interesting.
Yeah, exactly. So that's one of the second areas that we're seeing on how to grow stablecoin supply is clearly people want to trade all different sorts of assets, equities, Bitcoin, leveraged Bitcoins, and more often than not, the collateral that's being used to settle these is within stablecoins. And then finally, we're seeing, this return to traditional DeFi, if you will. And so Ripple actually launched a stablecoin back in around September of 2024. Um, Peaked at around $100 million and is now actually, on a tear. It's close to exceeding $500 million in supply, and growing at a very quick rate. And so we decided to say, like, what is actually like driving this demand for Ripple USD? And what's very interesting is that it's mostly DeFi driven. And so Aave took a significant amount of Ripple USD. They're close to about $250 million. They also did a very smart strategy of incentivizing Curve pools, which is a decentralized exchange which allows people to trade from USDC to RLUSD to Tether. They're also looking at incentivizing pools like Euler, and you really don't see any centralized exchanges come up as the top holders of Ripple USD. And I think right now, as we're in this sort of DeFi summer with protocols like Maple, Aave hitting new highs, you know, we really want to stress like we can't just forget about DeFi. It's certainly still here. It's certainly still growing, and it's absolutely a way to find demand for stablecoin usage.
And this is pretty like contrary to the other stablecoins, right? Because I believe for Circle and Tether, the largest amount of supply is all in centralized exchanges.
Yeah, exactly. So about I think in DeFi, USDC right now is the most utilized coin, but Tether is not as utilized in DeFi, but the vast majority of it's on centralized exchanges. So it's really interesting to see now with the stablecoin market getting a lot more crowded, how these different stablecoins are picking one of these strategies to say, okay, can I get my wedge in through trading, through DeFi, through payment? Should I, focus on a specific region to really sort of get that foot in to start growing stablecoin supply?
What do you make of this incentive program that Ripple is driving? I mean, you know, you're humble dudes. I'm gonna talk you up for a second. You're one of the, I believe, one of the best data scientists in this industry, and you've been helping chains and protocols and stablecoin issuers on designing their incentive programs for many years. And so I'm curious, like, what your take is on this attempt.
Well, first, that's too kind, but second, I know why you sent me that Tron Tether bonus, so thank you for that. But you're right. It's absolutely something that we see time and time again where protocols, companies will pay out incentives for different lending strategies, trading strategies, et cetera, to get that flywheel started. I think that the smart thing to do, and I think Ripple really, nailed it, where you want to incentivize the most liquid and most loyal pools. So, for example, Aave tends to have these more institutional adopters, larger deposit sizes. It's viewed as one of the most safe lending protocols. Curve has been around for almost forever in the DeFi landscape. Has very deep liquidity, and so you it's almost essential that in order to get the flywheel started, you need to run these incentive programs. But really like finding the most optimal incentive rate and doing an analysis of, okay, if I pay out 300%, obviously I'm going to get a lot of mercenary capital. But, if I pay out 4 or 5% and I go with these, blue chip DeFi protocols, we see, time and time again, less capital outflow because people are, more trusting of them. You get, safer capital come in. And so you really have to find that intersection of incentive rate and really trustworthiness and brand recognition of different DeFi protocols.
Yeah, and well, I guess like And on that point, like, what do you think in general? If somebody came to you and be like, "Hey, how do I increase supply in a high quality way for a stablecoin?" What would you say? Or would you say, how would you advise somebody?
Yeah, great question. And I mean, I think we've seen a lot of stablecoins evolve from different strategies over the years. Uh, if we were starting from zero, the strategy would definitely have to be, you have to pay out, some sort of incentivize people to mint stable coins, get them into, a DeFi ecosystem, a trading, ecosystem. And once you start that flywheel going, you really have to find these partners to really showcase technology. So, for example, Felix Pago partnering with Stellar, clearly that was a huge boon to the Stellar ecosystem for push 10xing transfer volume. So you have to pay out a little of incentives possibly to get the flywheel going, but then you almost have to serve as this scout or venture capitalist, if you will, and really push the partnership teams to find these different interesting use cases, find these companies that are really solving really interesting and challenging problems. And Felix Pago is targeting one of the largest remittance corridors in the world, and they're doing it in a cheaper manner. And so, if you can really solve pain points with stablecoins and find these companies that are really doing interesting activity, you can grow supply, grow transfer volume, and really form this like really loyal, sticky user base. And then third, I would say, then what do people do with these stable coins? So you almost have to become this, consolidator of, offering payments, remittances, but then, you want to keep the stable coin within your system. So maybe, Felix like company starts offering yield on it. Maybe they start offering trading. Maybe they start off tokenized stocks. And so you can see, when you start from zero, you incentivize a little bit, expand the offerings for people, actually solve problems, and then before you know it, you're a $1 billion stablecoin.
Yeah, no, that's a great take, because I think ultimately, right, I think everyone needs to figure out like a sticky second act. Is kind of how I interpret it. And the second act, I think, is what a lot of people forget, because you see this like immediate jump in supply when you're doing something on DeFi, having incentives, and then everyone feels good. But then if you see it time and time again, supply falls precipitously afterwards, because ultimately pure DeFi use cases, I think is very, a lot of people are just farming, or they're farming the incentives. But then like, what do they do after? And like, I think the teams that don't succeed are the ones that don't figure out what the second act is. And I think that's kind of like my learning.
Yeah, exactly.
Cool.
Well, on that note, I guess I should send maybe back this money. I haven't spent it all yet, but yeah, I guess I should send it back to you.
Thank you. We'll talk about your bonus your actual bonus some other time, Andrew. Well, I think that's all the time we have for today. Thank you for listening and watching to our Tokenized Stablecoin Stats show. Andrew, where can people find out more about you?
Well, you can follow us at Artemis on Twitter and also LinkedIn. And feel free to always send us kind messages and leave reviews.
And if you haven't already, please subscribe to Tokenized on Apple, Spotify, or whatever podcast platform you use. And finally, if you enjoyed this and you want more, leave us a review. It really helps others find the show. Thank you.
Stay stable, everyone.